Hey everyone, welcome to another video. It is 9 p.m. Thursday night, March 30th, and I wanted to go over some things and a quick Asian session trade recap that just ended about half hour ago. So, I know I started posting my first video. I've been really busy and I'm coming back, so I just wanted to make some announcements. If you didn't already know, I have a forever free Discord channel. So thankfully, very great community, lots of active people in there. Everyone is super friendly and always giving each other good advice. You can be in the live trading rooms, for example. Now, I recently started posting things again. If you haven't seen or you're not in this group, I have a lot of content that I post just on Discord. Lots of advice, lots of small videos, shorter stuff that I don't post to YouTube. And the reason why is because whenever I upload something to YouTube, it's actually a lot more work. And I do this for free more than anything to help you guys out. I give some advice and I share stuff that I learn. Today, for example, I made a pretty cool lesson on, how I simplified trading my ranges and strong points and weak points. I kind of made videos in the past, but I've kind of refined some things. So I have some new updates to that. I have a short video on here that I uploaded that's, I don't know, maybe half an hour long. But I didn't want to take up all the time by posting it on YouTube. So if you want to join, the link will be in the description. You can join. Of course, when I come on to trade, I trade once, maybe twice a week. Um, Typically, that's what happens. I will do my markups. So for example, today, let's go over my Asian session markups and then my Asian session trading. And pretty much the only day I traded this week was today, so Thursday. So I didn't trade Monday, Tuesday, Wednesday. I traded Thursday. I'm not trading tomorrow. I'm done. So I hit a small goal. All right, so March 30th, let's go over the daily time frame. So if you watch the video that I posted in the Discord, you're going to see the lesson that I go over how I mark my structural points and my targets, right? So on the daily time frame, we know that this high here failed to break structure to the downside. The daily order flow is shifting bullish, right? So we can see that on the higher time frame, this area failed to break to the downside. So the daily high is weak, so price is probably going to go bullish. Same with the weekly, the high is weak as well, so more than likely price is going to go bullish. On the 4-hour, this is what my markups look like. So here, let's see, can I zoom in? I'm going to zoom in here, 1 second. Let me pause it and open it up. Okay, so this is what my 4-hour markup looks like. So for example, we know the weekly and the daily on EU is bullish. Here on the 4-hour, we can see that we have this the selling that happens toward the, let's say, the upper end of the daily supply. And on the 4-hour, for example, you can see that we kind of tapped into this area up here, swept liquidity before breaking to the downside, price tapped, shifted bearish. So the 4-hour swing, this is the most recent swing. Price is in pullback. During Asian session, this is where price was. So it was already in the supply. It's possible the price is going to go bearish, but if it is, it could be short-lived, understanding the daily and the weekly are pretty bullish, right? So that's just something to keep in mind. Then, for example, we go back. Let's open up the 15-minute time frame. Here's the 15-minute time frame. Let's open it up again. All right, 15-minute time frame. This is simple. This is where we had the last break of structure on the 15-minute. Sweep some lows, take the high, break structure, pull back, waiting for a change of character on the 15-minute to shift bearish. This low to this high is the most recent swing. Obviously, there's no clean point of liquidity here, so this would be the first point of liquidity. So this is the swing I'm counting. It's the most recent swing. No visible liquidity, right? Here, what do we have? We have two scenarios. The structural scenario is the solid line. It would be a continuation to break to the upside, fueled by the daily and the weekly. But we also understand that we're in a 4-hour supply, right? So also, internally, because this is the 15-minute is bullish, it's not bearish. Anything that happens in between this low to that high is internal here, right? So internally, price can come up to this area here and probably give us a pullback that then gives us a better priced, let's say, long, or depending on what the market wants to do. Now we are going to be cautious, right? Or we were going to be cautious, especially because Friday we have lots of news, high impact CPI for Euro, core CPI. We have USD, PCE price index, whatever. So during, let's say, London session, toward the end, late London session, there's lots of news. And during the US New York Open, lots of news too. So keeping that in mind, that tomorrow is going to be full of news. So whatever happens right now, it's building up liquidity for the next move. Now, whether that's going to be pro higher time frame, daily, weekly, and go long, or let's say slightly high time frame to lower time frame, potentially could pull back and take a lot of liquidity. So if we're going to take a trade, we want to keep that in mind. So what I'm going to do is I'm actually going to show you my trade setups and what I took during Asian session today. We can go back to our Discord here, and this is me reviewing kind of what I've posted. If you're in here, you'll see. So here's my Asian session trading, close to end my day early. This is what my time frame entries look like at the 1 minute time frame. You can't really see it on the 1 minute because it's a 15-second entry. So here you see the 15-second. I'll go over it. Here you can see my secondary entry. So we have a rejection, a sweep, right? We have some equal highs, but price takes the low. So I'm going to be confident to take another entry, 3 pips stop loss. We're in Asian session, right? So sometimes it's good to have that. Price pulls back. Hey, keeps us in. We're still good, right? So price then breaks to the downside. We have a sweep of those equal highs, which is perfect. And we stay in that trade. This is what my overall target looks like. It would be about 20 plus R from that high to this low. In my mind, based on the 15-minute, this failed to close above. Very likely price takes out this low. This is Asian session. You can see that we've built up all this liquidity. More than likely, all of this is going to be easily taken. This is all internal, and this is the lowest point. Very likely to go. Now, in my mind, I'd rather end the night trading at 8:30 p.m., take my profit, and not have to deal with the news if I get a pullback. Usually what I notice is around 9 p.m., 2 hours or so before the London session. Oftentimes we get a pullback if Asian session makes a, let's say, an impulsive swing or an impulsive move like this that fails to break any big structure. Like in this case, this was 5-minute structure, but it hasn't really done too much. So many times during London, price will accelerate, take, and let's say mitigate my entry, which I'd rather just take profit than have that happen. And so I closed with 11R for the session right here, right? So for me, that's perfect. I'm fine, 11R in Asian session. So what I'm going to do now is I'm going to take you to the chart. So let's go over here and I'm going to go over my markups. So a couple things, I'll look at multiple time frames usually when I'm taking my trades. So what was I looking for? These are pretty much the same areas that you saw marked up. What we have is this low down here on the 5-minute time frame. Let's start with the 15 minutes so you can kind of see what I was noticing, right? So we have this area here, lots of inside bars. We have a sweep of those equal highs, break to the downside, but still this is the low, that's the high of the swing. No change of character here yet. All of this is internal. Price makes this internal low and then shifts bullish internally here, right? And here you can kind of see we're just building lots of liquidity here, easy targets for sells later, right? Price kind of swept all that, and that's why I closed my entry, right? So this area very likely to get tapped. If price wants to go bullish, right? It failed to close above, so what? That means this is weak. Likely this can go, right? And it would make sense if price mitigates this area. At the same time, price could also do this and give a potential long, because guess what? The weekly and the daily are strong, bullish, and we have equal highs now, so this could also be the move. So lots of opportunity there. At the minimum, I did think that that's probably going to go, and it probably still will. There probably is a really nice re-entry for shorts here, but I'm done for the night. I'm going to go to sleep after I make this video because I wanted to make sure that I could be more consistent for you guys, right? So let's get into this time frame. So what happens now is I'm watching price action on the 5-minute, and I'm waiting to see my area get tapped. So, for example, I believe I had it here. This is, I think, where kind of what I was highlighting. So once price is approaching this area here, it's internal. It's a low probability short. For me, it's more of a reactionary zone, because here we pull back, mitigate supply chain here, and then break to the downside. Even though this is all internal price action, we could have an internal pullback and then take out this liquidity and then continue. Or we can also have an order flow range develop. So anyways, what I'm looking for is a reaction to this zone. So when I go to the 1-minute time frame, here's what I'm noticing. I, for example, take one loss here. So this is where my session loss was. I look at the 1 minute time frame and I'm looking at the 15-second time frame at the same time. And so here, for example, what do we have? Let's go to the 15 seconds so you can kind of see what I was looking at. Would be, let's turn on this so that it shows up on that time frame as well. Awesome. So I'm watching the 1 minute and the 15 minute at the same time typically. So in this case, here's what I'm looking at. I think this was it for me. Yeah. So I think maybe I marked out this one here. I marked out the inside bar. Sometimes I just use the inside bars. So for example, on the 1 minute time frame, this looks like it breaks. It's kind of creating a flip. Here what we have on the 15-second is this is a swing. So price very impulsively takes liquidity, taps the supply, the 5 minute, 15 minute supply internal that's going to give a reaction. When I see a move like this, usually what I expect is a V-shaped recovery. So sometimes price is pretty aggressive during those moves. So here what I basically did is I saw that here, as price was already pulling back on the 15-second, I could already see that sometimes, and I use inside bars when I'm being really aggressive. So in this case, for example, we're taking some liquidity here. Price makes this low, pulls back, and does what? A sweep. Every time I see sweeps, for me, that's going to be a potential entry. So I saw this area here, for example, that I can get an entry into. We can mark out the entire range. And I'm watching it on the 1 minute and I'm watching it on the 15-second. So I have this area here. If price pulls back here, I will take shorts. Right? Let's look at that again on the 1 minute time frame as well. Let me do some bar replay here so you can see. All right, so on the 1 minute time frame, this is what it looks like. Short, we sweep, and we continue. We take the low right there with that inside bar. Right, and on the 1 minute, this is what the 1 minute area looks like for me with the inside bar. On the 15-second, here's what I can also see. We have a equal lows here, right? So I can see here that we have this little zone. Looks like a little doji candle. Price breaks, changes the 1 minute, or gives a 1 minute change of character. Price pulls back, takes liquidity, and when I see that it closes bearish like this and it's pushing downward and it's pulling back to this area, what I'm basically looking for is just to see if I'm going to get a reaction here, and that's where I take my first entry. So I take my entry just around here when it taps, and that I gave it, I think, a 3 pip stop loss as well. Yeah. I took a 3 pip stop loss for this, and then what I did was same target as I was going to have, but after we break and we showed this impulse to the downside, then all I wanted to do was protect this sweep high. So I cut my stop loss from 3 pips to 2.3 pips, I believe is what it was. So let's look at it on the 1 minute time frame so you can see what it looks like. Same thing. 1 minute time frame, we can see that it swept liquidity. I want to cover this and at least if it taps the bottom of this range. So for me, a 2.3 pip stop loss, which was modified from a 3 pip, it's like basically like cutting your risk by 30%. And what I was looking from here for was to get price to pull down to here and take out the same level. Actually, this was the area that I want to target. And that would make sense to me, right? If we get an aggressive reaction here, very likely this one will get taken out. And that would be my trade about 11R, which is why, I still wanted to target this low in my trade initially. What then happens is price hits stop loss, and I'm not willing to take a re-entry because what happens is within 1 minute we get this aggressive push to the upside. So I wasn't even paying attention. Stop loss got hit, came back to the screen. So I said, okay, that entry is not valid. So now what am I going to look for? Now, once we break to the upside, I want to see a candle body close, right? So we're just going to play price action. And then what I want to see is I want to see it take some lows, right? Now, in this case, we want candle body closure. So here we have candle body closure, right? So here is where we are continuing like this. Equal highs, and guess what? Because that's the low, this is the new low For a changing character in my mind, I have to see price take something like this, right? Now, this would be an area of demand, so price could very much come for that area too. Let me see, make sure all my things are turned on. Yeah. So let's leave that on so we can play it. Actually, yeah, so here you can see, for example, same zones marked out. So I have this area here, and I have this one marked as well. This one sweeps some liquidity, and we can get continuation. So price is pushing to the upside, and then what do we see? A very impulsive and aggressive push. Actually, to the left, there's a little POI, I believe. Let's see, did I get rid of it? I might have. So if I scroll to the left, over here at this extreme, you can see this inside bar. So this to the extreme, I'm expecting a reaction to that area. So because that's an area that swept liquidity and we have inducement here, we break to the downside. All of this area here, that's a lot of liquidity. So if we're going to get a reaction, we very likely could get one from here. So let me show you what I was looking at. Here, for example, what we have is this area that takes liquidity. So that would be, for example, my current change of character. And I also would be able to use this because it sweeps liquidity as a reactionary zone. And then this is when I begin to use the 15-second chart to get my entry. Because now that we are in that 1 minute extreme, so think about it like this. When do we use the seconds time frame? When the higher time frame is aligned with your bias and when you're in absolute extremes, right? So I already took one loss, right? And that loss, it made sense, but what? It gave a 1 minute change of character. It gave two sweeps, so swept liquidity, continued, swept liquidity, continued, right? So that would have made sense. Now, whatever happened to cause that spike at 5:55 p.m. my time zone, that's fine, that's a loss, but it came to the extreme, as you can see here. So what I want to see now is how is price going to behave here, and I'm going to show you how we got that entry. So on the 15-second time frame, already here you can see that we have a sweep. So we swept some liquidity here internally, and then we push to the downside. More than likely we can react here, but this is the area that sweeps liquidity, so that's where we have an extreme. So already we're seeing a reaction. So whenever we see a reaction to a zone, we're going to mark it out just because we want to see what area causes that break. So we're getting a little pullback, so that's looking good. Okay, so what could price react to? For example, now what we can do is we can pull this back and we can see what happens. I want to see how price reacts to this extreme here. Okay, boom, explodes again to the upside one more time. And currently, where are we in this, for example, in this supply reaction? We still have yet to tap the 50%. So because it's still somewhat mitigated, you could, if we got a 1 minute change of character, take an entry here. But notice, sell to buy, this is a swing makes the high. Here we take the high, or maybe equal highs even, but we don't really take the low that made it, because this is the low that makes that. And this is the area that takes liquidity that makes the swing on the 1 minute. So a 15-second change of character wouldn't even be there yet. All right, so let's see what happens. Now we have this area here, this candle, this order block that blasts through the roof, takes out that high, comes into the 50%. And then what are we doing here? Let's see. Okay, very aggressive V-shaped recovery that it looks like it's forming. So we take liquidity, and guess what? Now we have these areas that we could look for. So for example, this would be the range. We make this high, we pull back, make this low, lower high, or higher low. Here we have a little reaction, and then we take this. So in my mind, if I'm going to see a change in character, this low goes, or this low goes, and that would be pretty good. That would be for the 1 minute. Now remember, we're on the 15-second, so let's get a 1 minute perspective here. On the 1 minute time frame, because we want a nice 1 minute change of character to likely happen here, we have this high, we pull back. This is the 1 minute low. This is the order block. So for me on the 15-second, that could be enough. Here we can see that we have this low to this high as a swing that I marked up, and we have a 1 minute inside bar order block. If price comes in, gives a reaction here, pulls back, we are already pretty much testing the extreme of this supply. And now look at this. Above we have the supply from the 4-hour time frame. So if we're going to take a trade, we can be pretty aggressive here. So we go back to the 15-second. So let's go here. Okay, so now what do we have? Price, I guess we kind of went backwards here. Let's go to here. Here we have the 1 minute inside bar. So this is the 1 minute inside bar order block that breaks the high. So we're waiting for price to come in. Tap. Okay, so once we tap this, what are we expecting? We can see, for example, a flip forming. So we have this area, price comes in, it can give us a reaction. We want to see it maybe take some liquidity or fail to make a new high and then break the initial reaction, give us an entry, and then continue to the downside. All right, so what happens here? Same move that we were seeing earlier. It looks like we're taking this high. We could be sweeping. So this is an order block that we're developing on the 15-second time frame. So here, order block explodes, takes that, sweeps on the 1 minute time frame. More than likely, it's going to leave a wick. So here, for example, we're already seeing some rejection. Price is pulling back. We want to see how price handles this 15-second that took that 15-second high. Right, so this low is strong on the 15-second as it takes the previous high here. So we're looking to see what that reaction looks like. Another sweep of liquidity here, right? So we sweep the previous candle, and this is the initial reaction. Right, we sweep again. So all we want to see here is now we've developed a small range. So if we looked at this on the 5-second time frame, you're going to see it looks like an order flow range. So for example here, we have this low, this high. We take the low, we take the high. If this low goes on the 15-second time frame and the 5-second time frame, now we've taken the low, the high, and now what we're going to do is we're probably going to break through. So what that looks like on the 15-second time frame, even though it looks very insignificant and very small, when we sweep both sides of liquidity, right? If this low goes, we can take an entry. So that's where my first entry was going to be. It would break this reaction, right, that formed this lower time frame 5-second order block. And then boom, that's your first entry. Now, what does that look like on our screen? For example, here I can show you. Here was the first setup. So this is a screenshot that I took of the same zone. You can kind of see what that looks like here. These are all taken in real time with the timestamps that you can see at the top right-hand corner or left-hand corner. And then this is the entry. So you see that little order block, order flow range that takes the low, takes the high, and then as it breaks through, it takes out the reaction. That's where my entry is, and I have a 3-pip stop loss. So that's the initial one, right? Let's see what the next move here looks like. That would be my perspective of what I'm looking for. So my initial trade was going to be from here, would have targeted lower, but now, we failed to take the high. My minimum target would have been there. That's for the perspective, and then this will be a retest. So for example, now we have this high that takes liquidity and we break to the downside on the 15-second. We have yet to give a 1 minute change of character, but we're already showing signs that we will. All right. So here what happens, very aggressive push. More than likely, what am I thinking when this happens? If this happens, for example, either we're sweeping this or we're coming to the extreme. If we come to the extreme, more than likely, because the extreme didn't do anything, I would expect all these highs to go, and this 4-hour target that is right here, the dashed line, is more than likely to go. So that would be a failure of the trade, right? So here we are. Buy to sell, takes the low again. Now what do we have? We have equal highs, but also a supply chain that's forming. So in my mind, when I see something like that, I'm seeing a retest and a rejection. So here you can kind of see that. On the 1 minute time frame, this is what it looks like. On the 15-second time frame, here's what it looks like as well. And what happens there? We take our next entry. So secondary entry, same amount of stop loss is entered right after that. Boom. So that's where we get our entry. Price takes that low. That's enough confirmation that the high is going to be protected. and we have a 3 pip stop loss. Of course, this is very aggressive, but we've given a 1 minute change of character. So now we have this protected high and this low. We close with the wick, tells us that this high is weak. We have equal highs, so that doesn't always look the best, but guess what? We have a sweep of equal highs and then what looks like to be a continuation. Right, so our 3 pip stop loss protected us. That's why I don't do break evens, especially when I'm trading with seconds entries. Right, so that's what it looks like, and then I'll follow through the scenario. So entry after the second rejection candle. Here you can see what it looks like when we have that sweep, and before the continuation occurs, I already believe that it's going to be a sweep and continuation. So you can already see my markup says that. It's one of my tools. Here you can see once we break, we've given confirmation. So now this is a liquidity POI, so it's a reaction on the 1 minute time frame. Right, this is a flip that takes liquidity, so more than likely that area will be protected, and this is what the setup looks like. Right, so now at that moment, what do we have? We already break through that low, so now what I'm going to do is I'm going to go to the 1 minute time frame, and from there 1 minute and 15 seconds is how I'm going to monitor this trade. But here we can go ahead and just bar replay this. It wasn't a very long trade. These are areas where we can get reactions from, right? This area here sweeps liquidity, breaks the upside. This one here sweeps liquidity, breaks the upside as well. Here we're generating a small reaction, right? Same thing, because anything that takes liquidity is going to generate a reaction. It's a catalyst for a pullback, but this was a very impulsive swing. Whenever there's a very impulsive swing that happens during Asian session, usually London session is going to create some sort of reversal for mitigation. It happens all too often. And so when I see something like this happen with aggression during Asian session, I usually prefer to close it. Usually my standard for Asian session is my minimum target is 5R in this case. And usually I don't take a trade unless I see a potential of 10R. In this case, because I had 2 entries, I was able to get double the reward. So for me, it was okay to close it early. Let's continue. Now the 5 minute changes character. So we have a 5 minute bearish change of character. Here's what it looks like on the 5 minute. Right, so here we pulled back, we take liquidity, and we push to the upside. None of these candles trade lower. This is all inside bar. So we make this push to the upside. So this is the 5 minute low, 5 minute high. The 5 minute shifts bearish, and here we have what could be a 5 minute order block, right? Buy to sell, engulfing. So price could very well come back up to that area. And then what are we watching for? We're waiting for the same thing as earlier. So this is what happens during price action. We get a pullback. Here we take the previous, let's say, the first point of liquidity before we break to the downside. So we form an order block here. So we add the little range there. Expect that area to be respected. That's the first tap. Shows like it's the first sign of respect there. Comes back to test it. Shows some weakness. We have an order block here on the 1 minute with an imbalance. And then price ends up sweeping it. The moment it sweeps it, same move, a sweep and continuation. We're watching this on the 15-second and the 1 minute. Guess what? We sweep, change of character, order block left behind. We expect the low to go now. Now at the same time, what do we remember? Whenever we take the high and we take the low, we want to be careful because sometimes what that is a sign of reversal as well. So in this case, instead of respecting the supply and breaking to the downside, we swept it. So if we take the high and then we take the low, it's also possible that that's a reversal. And that's also one of the reasons why we close early. So we get a reaction here. Here, for example, we push back up, showing some signs of rejection. Order block. Takes out the first reaction, breaks through. We took the high, we've officially taken the low. And here you can see that this is a pullback, right? So this is a flip, right? Reacts, forms an extreme, breaks to the downside. If price is going to pull back, this would be an area of liquidity. Price could come back to this extreme here of this swing that took liquidity, right? Or the order block could just be respected. And then this is when I already closed my trade. And let's see where we are now. All right, so looks like we closed at the right time for right now. This trade lasted from entry, let's say entry 1 to finish. Let's go from here, grab this tool. Here we are. So from entry to exit lasted 1 hour and 49 minutes, 48 minutes. So less than 2 hours, 11 hour during Asian session. Not the greatest, but hey, it works out for me fine. The next, let's see, the following time that we've been in this range would be from here to here, another hour and 17 minutes. So almost the same amount of time that we've been ranging. Look at that, we swept that liquidity. So what, sweeping continuation. Now this low is weak, should take that, and then more than likely this low is gonna go. Now at the end of the day, all that for an extra 6 pips with 2 entries. It's just a total of 4 R of a difference. So I'm fine without taking that, calling it an easy night. So I hope you enjoyed that video. Let me know if you have any questions. I guess I'll finish by showing you off these pictures here. These are the entries that I had, same thing. Right, there's lots of them here. That's the MT5 entry. So here you can see stop loss, take profit, price. At the screenshot, the time, took my MT5 on there. And then we'll just skip toward the end. There we go. Alright, so I hope you enjoyed this short video, trade recap, updates on what we're doing. Let me know if you guys have any questions. If you want to join the Discord, it's going to be in the description, and I'll catch you for the next video. Have an awesome weekend.